All right, welcome back, everybody, to another deep dive here. Today, we're looking at Lululemon Athletica.
LULU.
LULU, yep. They just had their earnings call. Market definitely had a reaction to it, and we thought it would be worth taking a deeper look, kind of understanding what's going on in the business, and maybe more importantly, what does it mean going forward? So
Yeah, definitely some interesting stuff in this one, I think.
yeah. Why don't we just jump right into it? From a high level, what were some of the key highlights from the results?
Yeah, so they had, a decent quarter, I think is, a fair way to put it. Revenue was up 8% in Q4, or 9% if you strip out the impact of that 53rd week last year. So, solid growth. Profitability also nudged up a little bit. Operating margin came in at 28.9%, and earnings per share had a pretty significant jump, 16%.
Yeah, 16% is a big number.
It is, yeah.
Yeah.
Looking at the full year, they hit $10.6 billion in revenue, which, again, up 8%, 9% in constant currency. So kind of stripping out some of the noise from currency fluctuations, pretty similar picture there.
Mm-hmm.
Full year operating margin was also better, 23.7%, and adjusted earnings per share grew by 15%.
Okay.
Yeah. And I think also notable is the fact that they bought back a lot of stock. So over the course of the year, they repurchased about $1.6 billion worth of their own stock. $332 million of that came in Q4.
Okay, so 8% revenue growth, it's a solid number, but I think as we kind of dig a little deeper, the real story here is kind of the contrast, I think, between what we saw in the U.S. versus international.
Right.
What do you think is driving some of those numbers?
Yeah, so product innovation is still a big part of the story. In Q4, they said that outerwear and those second layer pieces performed really well with both men and women.
Yeah.
Accessories also continue to be, really strong for them. Seems like everybody loves their bags. And they also said that they saw good customer response to some of the new products they added in their core categories during the holidays.
Oh, interesting. Yeah. So, some promising signs there. So, everyone listening wants to know what's coming next. What new products are they launching? Give us the scoop.
Yeah, they're actually putting a lot of emphasis on newness this year. Right out of the gate, they already launched this new line called Glow Up. It's a technical line for women. It uses their updated UltraLu fabric. It's supposed to be really smooth and sculpted for training. Right now, it's just tights and a tank, but they plan to kind of build that out over time.
Cool.
They also launched Daydrift, which is a lifestyle trouser for women. Uses their Extreme fabric, all about comfort and versatility. And this one's actually been doing really well. They've actually had some sellouts in certain sizes and colors. They said they're ramping up production. And it sounds like, they're expecting this to become a new core franchise for them. Yeah. And then the last one they highlighted is called Be Calm. It's a new yoga collection, really focused on softness, relaxed fit, kind of for both, on and off the mat activities.
Nice.
Yeah. So, a lot of new stuff hitting the shelves.
Wow. Okay. So that's a lot. And I know they have even more in the pipeline. What else is in those labs that they're working on that we should be excited about? Yeah.
So for men's shorts, they said they're going to be updating their License to Train short. Also launching a new franchise called Mile Maker for runners. For women's shorts, they're adding new seasonal styles and colors to their Fast and Free line. Also some innovation within the Swiftly franchise, including a new run short. They talked about a new fabric they're launching called Lululemon. And basically what they're trying to do is create something that has the look and feel of linen, but with their kind of, technical performance built in.
Interesting.
Yeah. And then, the Align franchise is turning 10 this year. Yeah. They already launched the Align Palazzo pant. They said they're going to have more new bottoms coming, including a no front seam legging, which is kind of based on feedback they've gotten from customers.
It's amazing. The Align, 10 years. That's almost a lifetime in the, athletic apparel world.
Yeah. It's really become kind of a staple for them.
Yeah. So, they're definitely focused on keeping the product line fresh, right?
Yeah.
But how are they making sure that this newness and their, existing stuff is actually getting out to people on a global scale?
Yeah.
Because I was looking at their brand awareness numbers internationally, and some of those numbers were pretty low in some key markets.
Brand awareness is definitely a big focus for them, especially internationally. They actually called out some of those numbers. They said, in France, Germany, and Japan, their unaided awareness is in the single digits, which is pretty low. China's a little better. They said it's in the mid to high teens. UK, Australia are in the 20s. The US is a little higher, around 30%. But, even there, they see room to grow. And so they're really leaning on three things to try and build that awareness. First, they're doing a lot of these like hyper-local, community-based events and activations. So like partnering with the Rock and Roll Half Marathon in Vegas, for example. They did some pre-race yoga, some cheer stations. They had a co-branded product. They took over the Sphere. They had that glow up studio pop up in Soho where they had all these sweat classes with ambassadors and trainers. They did a big launch party for their collaboration with Saul Nash during London Fashion Week. They relocated and expanded their Regent Street store. They took over the big screen at Piccadilly Circus. And they did this thing called Membership Madness where they had, member only events and in-store stuff and free classes and exclusive experiences.
Okay.
Yeah. And then the second thing they're doing is they're really strengthening and expanding their ambassador relationships. And they've added some pretty big names this year. So PGA golfer Max Homa, tennis player Frances Tiafoe, and even Lewis Hamilton from Formula One.
Wow, Lewis Hamilton. That's a big name.
Yeah. And so the idea is that they're going to be leveraging these ambassadors through activations at big sporting events like the Phoenix Open, Indian Wells, Formula One races, things like that. And then the third thing is that they're really investing in global brand campaigns. They just launched this live, like You're Alive platform. And the first campaign featured Joan McDonald, who is, a 78-year-old fitness influencer.
Ooh, wow.
And they have more campaigns coming. They're going to celebrate the 10th anniversary of the Align franchise in Q2. And then later in the year, they're going to do a big run-focused campaign. So yeah, it's a multi-pronged approach to really try and build that brand awareness globally.
Yeah, those are some really cool initiatives. So, all right, let's zoom in on the U.S. for a second. What's the dynamic there? What are we seeing?
Yeah, they acknowledged that they kind of missed an opportunity in 2024. They could have had more newness in their merchandise mix. But they made some changes in the back half of the year. And it sounds like customers responded well to some of the updates they made. But importantly, they are still acquiring and retaining new customers at a good clip. They're focusing now on increasing the revenue per guest.
Right.
So, continuing to offer that newness and innovation and trying to get people to spend more. But they are seeing a more cautious consumer right now.
Yeah, that makes sense.
Just given the macro environment. They cited some survey data showing that people are pulling back on spending because of inflation, economic concerns. And, that's led to slower traffic pretty much across the, U.S. retail landscape. And Lululemon hasn't been immune to that. But they did say that when people come into their stores, they seem to be responding well to the newness, to the innovation. And so they're seeing positive trends in things like UPT, average order size. So, encouraging signs there.
Okay.
Yeah. But for the full year, they are expecting modest growth in the U.S. So, they're not expecting a huge acceleration there.
Yeah, it makes sense. So it seems like stores are still a big part of the strategy. What are their plans for their physical footprint in 2025?
Yeah, absolutely. I mean, they see these stores as much more than just places to buy clothes. They really see them as community hubs. It's a way for them to engage directly with their customers. And so in 2025, they plan to grow their square footage by about 10%. And they're going to do that through new store openings and also through optimizations. They're entering Italy. This is going to be their first company-operated market there. They're going to be entering Denmark, Belgium, Turkey, and the Czech Republic using the franchise model.
Okay.
Yeah. And just to give you an example of the optimization piece, they relocated and expanded their Regent Street store in London. And this is a huge store now. It's 14,000 square feet. It's got the biggest pant wall and men's assortment in all of Europe. So they're really, kind of doubling down on that store experience.
Cool.
Yeah.
All right, so let's talk about some of the specifics from the fourth quarter. Aside from kind of the top line numbers, what are some of the key takeaways that you pulled from the quarter?
Yeah, sure. So, we talked about that top line revenue number, $3.6 billion, up 13% or 14% in constant currency. But even if you strip out that 53rd week, it was still a really solid 8% growth, 9% in constant currency.
Yep.
Comparable sales were up 4%. Regionally, the Americas grew by 3%, but, there was kind of a divergence within that. Canada was really strong, 11% growth.
Wow. U.S.
was only up 1%. So, definitely some weakness there. But China mainland just continues to be on fire. They were up 39%, 27% comparable sales growth. Rest of world also really strong, 26% growth, 17% on a comparable sales basis. Their store channel sales were up 13% in constant dollars if you exclude the 53rd week. And they ended the quarter with 767 stores globally. So their square footage was up 14% year over year.
Okay.
They opened 18 net new stores in Q4, and they optimized 16. Digital revenue, that was up 8%, 4% if you exclude the 53rd week. And, digital now accounts for 50% of their total revenue. So a really important part of their business.
Right.
From a category perspective, men's was up 12%, women's 6%, accessories another 9%. Gross profit was $2.2 billion. That was 60.4% of net revenue.
Okay.
And that was up from 59.4% in the same quarter last year. And they said that was driven by lower product costs, lower markdowns, and better shrink. But, that was partially offset by higher air freight costs and some FX headwinds.
Okay.
SG&A expenses were $1.1 billion, 31.5% of revenue. That was compared to 30.9% last year. And that was driven by some of these strategic investments that they're making.
Okay.
Operating income was $1 billion, or 28.9% of revenue, up from 28.5% last year. Net income came in at $748 million, or $6.14 per share,
Okay.
up from $5.29 per share last year. Capital expenditures were $235 million.
Fuck.
A lot of that went to the distribution center, store capital, and technology investments. They ended the quarter with $2 billion in cash and cash equivalents.
Wow.
And their inventory increased 9%, which was actually slightly below their guidance.
Interesting. Okay, so now that we've kind of reviewed the fourth quarter, let's shift gears a little bit and talk about what they said about the full year ahead. What's their kind of roadmap look like for 2025?
Yeah, so they are projecting revenue between $11.15 billion and $11.3 billion for the full year. So that implies growth of 5% to 7%, or 7% to 8% if you exclude the 53rd week from last year. They do expect a negative 1% impact from foreign exchange. We talked about that a little bit. They're expecting modest revenue growth in the U.S. They plan to open between 40 and 45 net new company-operated stores, and they're going to complete approximately 40 optimizations. So that would be about a 10% increase in square footage. They said most of the new stores will be in China, with 10 to 15 slated for the Americas. In terms of profitability, they actually expect their gross margin to decline by about 60 basis points, and that's going to be driven by fixed cost deleverage, FX headwinds, and increased tariffs on goods from China and Mexico. They do expect markdowns to be relatively in line with 2024. On the SG&A side, they expect leverage of about 40 to 50 basis points, and that's going to come from investments in their Power of 3x2 roadmap, but also some FX headwinds. They said they're continuing to invest in marketing, brand building, international growth, and technology and data analytics. And so they're expecting operating margin to decrease by about 100 basis points. Again, they're facing some pretty significant headwinds there from FX, from tariffs, and then also just from layering back in some of the expenses that they had pulled back on, things like store labor, travel, incentive comp.
Okay.
They expect their effective tax rate to be approximately 30%. And they're guiding for diluted earnings per share between $14.95 and $15.15. So that compares to $14.64 in 2024.
Okay.
This does exclude any future share repurchases, but it does include the repurchases that they've done year to date. And it also factors in about a 30 to 35 cent negative impact from FX. In terms of inventory, they expect their dollar inventory to increase in the high teens in Q1, and they're projecting capital expenditures between $740 million and $760 million.
Wow. Okay. So, we looked out into the full year 2025. What about the more immediate future? What do they have to say about their expectations for Q1 2025?
Yeah, so for Q1, they are guiding for revenue between $2.335 billion and $2.355 billion. So that's growth of about 6% to 7%. And, consistent with the full year, they do expect about a 1% negative impact from FX. They plan to open 3 net new company-operated stores in Q1. They said that they expect gross margin to be about flat compared to Q1 2024. There's a little bit of a mix there. They're expecting modest product margin improvement, but that's going to be offset by fixed cost deleverage. They are planning for markdowns to be relatively flat year over year. They did guide for SG&A rate to deleverage by about 120 basis points, and that's primarily due to these foundational and strategic investments they're making, including in brand awareness. Operating margin, they're expecting that to deleverage by about 120 basis points as well, and they're expecting earnings per share between 2.53 and 2.58. That compares to 2.54 last year. And that does include about a 6-cent negative impact from FX. And they're expecting the effective tax rate to be around 30%.
Okay. All right. So, we've gone through a lot of detail here. What do you think are kind of the key things that investors should be thinking about, as they look at this company?
Yeah, I think a couple of things. I mean, the fact that they're guiding for lower gross margin for the full year, even after, a pretty decent Q4, I think that's notable. They're really being hit by these tariffs, by FX, and it suggests that profitability might be a challenge for them going forward, even if they continue to grow revenue at a decent clip.
Yeah.
We talked about that modest growth outlook for the U.S.
Yeah.
Even with all the new products and marketing efforts, it really highlights the impact of this more cautious consumer, the macro uncertainty. The good news is that their international business is doing really well. China, rest of world, both really strong. And that kind of highlights their potential there, which I think could be really important if the U.S. market does soften further.
Yeah.
And then, lastly, I think their investments in marketing and brand awareness, especially in those international markets where they have lower awareness, that's a really interesting long-term play. They're clearly thinking about how they can build their brand and drive growth kind of beyond these current economic challenges.
Yeah, definitely some things to watch there. Okay, so let's have a little fun here. It's time for our This Is Not Financial Advice segment. Based on everything that we've talked about, what is maybe like one outrageous but plausible trade idea that you have?
Outrageous but plausible. All right, okay. So we talked about how their brand is strong. They've got a lot of momentum internationally, especially in China, but they are facing those headwinds from tariffs from FX. And, there's a chance that the U.S. consumer could soften further. So how about this? Consider going long LULU, but to hedge against some of that potential U.S. weakness, some of that potential margin compression, you pair it with a short position in, a U.S.-focused athletic apparel retailer that doesn't have quite the same, international footprint or brand loyalty. So you're betting on Lululemon's global growth story, but you're mitigating some of the risk that comes with the domestic market, some of the risk that comes with those margin pressures. You're trying to, capture the upside, but acknowledge the challenges.
Okay, so buy LULU, short some of their competitors here in the U.S.
Yeah.
All right. Interesting thought.
Again, this is not financial advice.
Of course. Don't trade on what we're saying here.
Yeah.
All right. Well, that was our deep dive into the latest Lululemon earnings call. We covered their financial performance, their strategic initiatives, what they said about their outlook.
Yeah.
A lot of information to unpack here. What stood out to you the most? I mean, were you surprised by the strength of their international growth, or are you more focused on the potential impact of these margin pressures?
Yeah, it's a really interesting story. I think they're doing a lot of things right.
Yeah.
But, definitely some challenges on the horizon as well.
All right. So as always, we encourage you to, go do your own research, consider all this information, think about what it means for your own investment decisions. And just remember that trade idea, that was just food for thought, not financial advice. So please, do your own due diligence before making any decisions.
Yeah, great advice.
All right. Well, we'll be back next time to break down another earnings call. And if there's a company or an earnings call that you'd like us to analyze, let us know.
Yeah, always open to suggestions.
All right. Thanks for tuning in to the deep dive.
Thanks, everyone.
See you next time.